Welcome back to Midcap Radar. Markets continue to build onto the gains that we've seen after the sharp intraday recovery. But moving on to the next management, remember, India has reported a big jump in textile exports for the month of May. India's textile exports have jumped 11% in May, which is the highest in the last 18 months. To get a better sense if there is more improvement lined up for the textile industry and how the demand environment currently looks like, we are joined by P Sundararajan, the chairman and MD of SP Apparels. Good afternoon, sir. Thank you so much for joining us. Give us a sense of how May panned out, for the entire industry, and how did it pan out for SP Apparels?
Yep. Good afternoon. See, generally, the industry is like, the most of the businesses are coming to us, India and Sri Lanka, because, there are too much of orders being placed in Bangladesh, and the retailers would love to move, more business from China to India and Sri Lanka. So that the process has, it has started now. So the orders have started for the coming seasons. The orders have started being placed in India as well as in Sri Lanka. So that's what is currently happening now. See, de-risking, risk mitigation in Bangladesh, and the China Plus One is working.
Okay, all right. So it is a good time for the industry for sure. Mr. Sundararajan, it's been a while since we've spoken on air, so good to have you on the show with us today. I wanted to understand, how are the raw material prices panning out right now, especially on the cotton side, versus, say, last quarter and last year? Are we seeing some stabilization here? And what does it mean for your margins by the end of this year?
Yes, this when compared to last year, the cotton prices has stabilized now. It is neither moving up nor coming down, so it's maintaining for the last about 2-3 months, and it looks like it will continue for a while. See, because there is no much requirement for yarn is there, so at the same time the cotton supply is well balanced with the existing current production of the spindleages now, so it will continue for some time, and I'm sure we will be able to manage for the whole year now. And it will not have a negative impact in our bottom line.
So the margin number, what will that look like by FY25, similar to FY24 levels in that case, or maybe some improvement?
Yeah, as I always give a guideline that always EBITDA we will be doing between 18 to 20. That's what we have been able to maintain so far, and we still hold on to that one.
So you spoke about margin, and you spoke about the guidance that you're given. Mr. Sundararajan, what I want to understand is this accurate? Please correct us if you're wrong. FY25, you're looking at a 7 to 10% growth in revenue. Has this been trimmed down from the earlier indication in the range of 10 to 15%? Is this pure organic growth, or does this also include the recent acquisition of YPBL, which is the young brand that you recently acquired?
Now, this is only the organic growth, as I've been always, this manpower is a big challenge in this industry here, but we have been able to overcome it now. So on a safe side, we said 7 to 10% growth within this existing company, without adding any new project what is running at the moment, without adding any of our Sri Lanka operations, which will come under SP Apparels 1, and without including the subsidiary company which we newly acquired.
Okay, all right. So that's excluding all the numbers that you have indicated in terms of the subsidiaries and other businesses. I wanted to understand your garment division. What is the current order book? What's the capacity utilization looking like? Because all of that has seen improvement in Q4. Your utilization increased at 78%. EBITDA came in at 165 crore rupees. Just the garment division, what is the kind of growth prospects that you're looking at in this segment?
Yeah, the first question is this capacity utilization. Yes, this year by end of FY25, our capacity utilization will be around 82 to 83%. That's how we are working towards that, and I'm sure we will be able to improve it. And in the investors meet, we have promised that in the next 2 to 3 years time, we are working towards 90 plus capacity utilization. It should happen in the next 2 years time. So that very well will give you a message that the growth, what the growth rate would be. And with regard to the profit, 165 crores, yes, we are very sure. Definitely there will be an increase. Reasonably there will be an increase, because we are working on. No, it's a standalone I'm talking about, without adding the new acquired company without adding Sri Lanka operations. So definitely there will be a good improvement in FY25 with regard to the bottom line, the net profit.
Just to follow up here, you said 100% capacity utilization in next 2 years. Is that correct?
90 plus. 90
plus. So around 1,200 crore revenues from just the garment division is what you're expecting in next 2 years?
Yeah, around that for sure.
Okay.
Mr. Sundararajan, if you're taking into account the FY24 revenues of 1087, working with a 10% increase in top line, that comes close to 1,200 crores. Now you have two acquisitions. Taking into account the two acquisitions, and if you're looking at the utilization rate that you just mentioned, what is the peak revenue potential? Taking into account both of these acquisitions, and when do you expect them to come on stream? Separately, also give us a sense of how exactly is the head brand doing right now. Last indicated, that was not performing as per your own internal standards.
Yep. Okay, so considering the acquisition of a young brand, which is currently doing 300 crores in the last year, so we expect this to perform, easily about 10 to 12% growth. So roughly around 330 crores we expected. So putting that also on top of this 1,200 crores, so it will about 1,500 crores. And we are expecting we are starting our Sri Lanka operations, means on the job work basis from India to Sri Lanka. That could get about 100 crores or something within this financial year time. So we expect between, that's the direction we are giving, that about 1,500 to 1,600 crores.
Okay, all right. So that is the number that we'll be watching out for with the acquisitions, with the capacity utilization.
This is the guidance we are giving. Yeah.
Yes. Okay, we take that point. I wanted to understand the SP UK division as well. This time around, it was an EBITDA loss versus a profit last year. What's happening in that particular segment, and generally UK, that particular segment, does that cater to the European markets, and how's the demand there?
Okay. Before that, when he asked about the head, I just want to update that the head business has been discontinued because the agreement, the contract license period is over now. So we will not be continuing with the head. So that is over now. It will not come under this retail as one of the brands of retail division. When it comes to SP UK, yes, as I mentioned before, we have completely revamping. We have been revamping the SP UK office because it was in Leicester before, and now we have moved it to London in the last 1 year time, and we have changed the entire team. The young head of the business, and there are design teams, everything in full proper shape, and all the customers have started visiting because it's easily approachable, about 30 minutes from the airport, 30 minutes from central London. So it's a strategically a good location, and we are very, very confident. I'm not over optimistic, very confident that we will bounce back, and definitely we expect about 10 million pounds of business in this year.
Okay. All right. Optimism is always good. Thank you, Mr. Sundararajan, for joining us today and giving us all those details. The stock is doing well today, up 5.5%, and the street likes what the management says. Well, with that, we're completely out of time on Midcap Radar today, but stay tuned. Your stocks when we return.